Hi everybody, George Veter, President, Founder of Veter Financial, talking to you here towards the end of November, and wanted to update you on all that's going on here, give you my take of how the economic climate feels and looks, and tell you about our near-term future plans to continue to improve and evolve into a better company all the time. First of all, to bring you up to date, we have a little correction going on in the market. On a normal stock market year, we're going to have one or two corrections just as a normal course of things to keep rebalancing the market. This correction that we've had so far, if this is as deep as it gets, is 5%. So it's a very minor correction. The Dow right now is just under 46,000, still at a very elevated state. We're grateful. I remember when the Dow hit 40,000, seemed like just the other day, we thought that was a miracle. Most of the selling that has been going on as of late is in reference to artificial intelligence stocks. The question of Wall Street analysts and in the market is mostly surrounding how much should we pay for artificial intelligence stocks. So I welcome that. Whenever there are these little pullbacks, to me, it gives me an opportunity to see what we can do in the portfolio to better balance it and make sure the market continues to grow in an orderly way. So I welcome these little pullbacks, but we had a strong September. We've been waiting for some type of a pullback, which would be normal before the holidays. So I don't want you to get caught up in any negativity that the media or social media would, I guess, suggest you that something horrible is happening to the market. It's just a normal little pullback that we get ongoing as the markets adjust to things going on with the economy. Right now, as of this morning, we have a 77% beat rate. So just under 8 out of every 10 companies that have reported on the S&P have beat their earnings that they told us to expect when they reported in July. That's an incredible beat rate. Also, as far as revenue on the overall S&P 500 set of companies, revenue growth from October to October, 37+%. It's been just a phenomenal period of time. We have the new tax law changes that I think we'll see evidenced in corporate spending at the end of the year. So corporations with a lot of money on their balance sheets that can expense improvements, productivity items like manufacturing equipment, etc., and take it off their taxable income in this year is a phenomenal thing instead of spreading it out in a depreciation schedule over 20 years. Understand too that you're properly diversified. So the way we've positioned you in our company as your financial advisors is where you don't have concentrated positions. We haven't overloaded in this artificial intelligence space that's getting a little bit of selling right now. We have on our portfolios some combination of 6 equity themes and 2 bond themes. Obviously, the more conservative portfolios have more bonds, less stocks, and vice versa. But those themes are going to be in all the portfolios we build for you. So you're hyper diversified. Your most concentrated position or your most dominant position is going to be far less than 2% of your portfolio. So we've done it right, and we have active management with you in mind, keeping you safe as much as we can in equity markets and getting you the most level growth that's possible. We now manage at Veter Financial Group well over $1 billion in assets for our clients. We have clients in 34 states. And the growth starting in 2001, and we started growing and marketing with this particular business model. We've tweaked it and refined it and tried to make ourselves more valuable to our consumers, our customers, our friends as we've gone along the way. Very few individual financial practitioners build $1 billion business and assets under management. So I just say that, but I'm incredibly humbled and super grateful. We have made an equity agreement that will finalize in less than 2 weeks with Osaic. Osaic is your broker-dealer. You see them on your statements. You've heard me talk about them. They've been our partner for a little over 5 years, but we now will have an equity partnership with Osaic, so they will own part of Veter Financial Group. The investments will stay the same. The way that we manage money will stay the same. Your service schedule and what you expect will stay the same. But we will have this very big, powerful equity partner. For continuity, if I got hit by a bus on my way home, we would have a big corporation that's already got skin in the game to keep this enterprise growing and keep our clients safe and secure. So the continuity of that is important to me, and estate planning wise, to make sure that the value of this company is understood, and they have approximately 10,500 representatives across all the United States. They provide banking services for lending. They have advanced estate planning access services, things beyond what we've been able to do without their equity partnership, plus a whole team of incredible professionals that now have a vested interest in the growth of this business and the taking care of all of you clients. Now, there's going to be some people stepping off the train and some people getting on the train as we go, as far as staff and people that work with us. And we've had one of our advisors that's decided to go off and to work on his own. We're interviewing CPAs starting this afternoon, and we'll get that whole plugged. And we're looking at expanding those services to be able to actually do tax returns in addition to tax planning and tax projecting for all of our clients. So bottom line, we're entering into the holiday season. I couldn't be more excited with how we're positioned in our portfolios and in our service model. I feel more excited than I ever have. Honestly, this is like a new beginning with our partnership with Osaic in an equity arrangement. And I see the momentum of our business going up notches, and this is like the highlight of my business career, this next chapter. So I'm grateful. Thanks for being loyal to us. We'll continue to be 100% loyal to you and delivering everything that we can. Enjoy your families, enjoy these holidays, be grateful, and you will equally be happy. Thank you. That's my message for today.